This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, November 30th, 2015. Euro dollar. So the euro remains under pressure with the market now within a stone's throw of that multi-year low from March at 104.62. At this point, look for deeper setbacks over the coming sessions to retest this level with a break below to then expose parity further down. Any rallies should be very well capped by the previous support now turned resistance in the form of that July base around the 108 area. Ultimately, only back above 110 would compromise the bearish outlook for the euro. Sterling dollar. So cable continues to make a series of lower tops and lower lows off that 2015 high, with the most recent lower top now confirmed by the high that we saw back on the 19th of November at 153.36. The latest breakdown now exposes a move below 150 and towards the 2015 base at 145.66 further down. At this point, only back above that high at 153.36 would compromise the immediate bearish outlook. Dollar yen. So dollar yen continues to chop around with the market confined to some consolidation between some key levels. Above, we have the 78.6 fib retracements off of the 2015 multi-year high to August low move. That comes in around 123.75. And below, we have the support that we saw going back to the 16th of November at 122.23. A break on either end is now required for clearer directional insight. A push above the 78.6 fib retracement at 123.75 would expose a 100% retracement and beyond that 125.85 high, while a break back below 122.23 would open the door for a fresh downside acceleration and could suggest a lower top in place by that 78.6 fib. Euro Swiss. So the recovery outlook in Euro Swiss remains firmly intact, with the market continuing to be very well supported on dips down towards 107, and fresh upside is seen back above the September peak at 110.50 and towards 112 further up. At this point, only back below 107.14, that low that we saw back on the 19th of August, would compromise the bullish outlook for Euro Swiss at this point. Aussie dollar. So Aussie continues to trade within a downtrend, and although the market has seen some consolidation in recent trade, a lower top is now sought out at 73.82 ahead of the next major downside extension below the recent multi-year low at 69.08. Only back above 73.82 would compromise the bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD remains very well supported on dips, with this structure highly constructive and now favoring a break of the fresh 11-year highs beyond that September peak at 34.57 towards the 140 area further up. At this point, any setback should be very well supported into 130, while ultimately only back below 128 would compromise the constructive outlook for dollar CAD. Kiwi dollar. So Kiwi remains locked in a well-defined downtrend, and the market has been consolidating off recent lows, although a medium-term lower top is now sought out by the high that we saw back on the 16th of October at 68.93, ahead of and in favor of the next downside extension below those recent August lows, those multi-year lows in the 62 area. SPX 500. So the S&P 500 has continued to be very well supported on dips, with the market trading back towards the record high from May at 21.37. However, we have since recently stalled out at 21.17, and if the market can put in a lower top and confirm that on a break back below 20.03, that would open the door for an acceleration of declines and suggest that a more medium to longer term topping structure is in place. At the same time, if the market breaks back above the 21.17 high from the 3rd of November, this would open the door for an immediate retest and break to fresh record highs. Gold. So gold remains under pressure, with this market trading down to fresh multi-year lows and looking like it wants to potentially test major psychological barriers at 1,000. A close below 1050 will solidify this prospect, while at this point the market would need to establish back above 1100 to take the immediate pressure off the downside. It is worth noting that daily studies are oversold here, so we could soon see a bounce, but again, with the psychological barrier at 1000 approaching, it may be hard for the market to avoid a retest or a test of this level before seeing any significant recoveries. At this point, again, a break back above 1100 would be required to take the immediate pressure off the downside.